Alright, hello guys, and glad to have you on board again today. We're gonna have to talk about this recent Bitcoin drop, taking down most cryptocurrencies along with it, of course, as usual. But these things have been warned, and I've said that multiple days ago when I have received my alert for excessive levels of derivative market leverage, specifically Bitcoin futures market, when it broke above 18.7 or 0.187. Where is my alert level? So I think I've warned you back in the 21st of December. Twitter should be accountable for this. And in that perspective, for several days, we have stood above these levels, accumulating the dumb money into unattractive Bitcoin prices. And of course, now I don't really know how laggy the data is. But as we started to drop on Bitcoin prices, I now suspect these futures leverage are supposed to draw down. So until they actually do, which will confirm the fact that we found our bottoming areas, well, we're still going to have to navigate a very blurry market condition. What I mean by that is the fact that we have the full confirmation now, but we already hinted these informations back then, both by these higher levels of leverage, meaning that short-term speculators going in with leverage is the sign that the dumb money is being manipulated by the big money and the whales and the market makers, or whatever you want to call them. But in that perspective, we were expecting this to turn out to be a Wyckoff pattern just because we had some very extremely low levels of sentiment. So this is the same old squeezing market condition in which we have very FUD-like type of sentiment when the rest of the market isn't that bearish. By the way. But in that perspective, we put a lot of pressure on investors. This is bullshit, or this is whatever. A lot of people talk about nonsense activity, and to be honest, like I've always made it real clear, don't look at information in markets unless you are trading that information with insider information, which none of you are. So please do not pay any attention to this. Look at your charts. They do not lie, because they tell you about risk management, which is the only language every professional traders talk about. Still, so very low level of sentiment market readings, meaning everyone is under heavy bearish pressures in their heads, and at the same time prices were doing absolutely nothing as the leverage were piling up. So of course that meant one thing to me, that dumb money was falling for the big money's trap. And in that perspective, they were just accumulating until they get enough money to try gambling one way or the other to flush out that dumb money's leverage. So, of course, the probabilities when we have negative sentiment is to try flushing to the downside, because that's what we've experienced multiple times in the crypto market, and everyone knows about those big low shadow candles targeting some leverage. So it was definitely, in everyone's mind, the likeliest outcome. I've always made it clear during the latest few days that this was an absolute bullshit type of certainty, and that only assholes and stupid traders were to going for this. So it's absolutely not something I'm willing to change. To be honest, the market has decided to go down today, could very well have gone up, and my personal stance was absolute 50-50 chances. So well, if you want to gamble on these things, then go to the casino, because of course this is not what we look for when we do trade. So the thing is that currently the market looks ugly. Yes, oh boy, it is. Well, I don't nearly think it's bearish, and I'm going to explain all of the technicals I have in front of me. So first things first, before bullshitting your heads with the sentiment, you need to understand that sometimes sentiment is something to follow, sometimes sentiment is something to fight against. When we are in Wyckoff patterns, I basically fight against the sentiment, meaning that I do use sentiment as a contrarian indicator, but that doesn't mean I can trade just out of it, okay? It's definitely not the case. But I'll explain everything about it, okay? The major information is, first and foremost, contextualize the fucking market you are trading. Never ever try to do any type of subjective type of analysis, sentiment stuff, Wyckoff, unless you do some background trend analysis, okay? So this, is it a range, is it whatever? It is a trend, okay? It is a range inside a trend. That is the daily pullback we've talked about multiple times, and we've also talked about the fact that earlier last year, or even late 2020, we have broken multi-time frame trends of daily, weekly, and monthly chart time frames, initiating an absolute massive adoption cycle for cryptocurrencies, and the metrics have tended to confirm all of this since then. So multi-time frame trends are going to be excessive, very excessive. They will look like parabolic skimming shit at the end. And well, boy, we're pretty damn far away from this. If you have a look at monthly charts, well, we're not yet parabolic, boys. We're gonna go much, much bigger than that. But still, okay, there is intermediate maturity. We're gonna have a daily pullback, then we're gonna get a weekly pullback, and then a monthly pullback, and then eventually we'll be done. So the thing is that the weekly chart itself is so far from making a pullback. So the daily pullback is settled. It's already done. It's the crash that we've occurred, okay? So what we're experiencing here has two options to me. The first one would be, this is the weekly pullback, but from all the experience I have from multi-time frame breakouts, and I have like really hundreds of them, in that perspective, I have not a single occurrence in which the weekly pullback occurred in the same price area of the daily one. So normally the weekly pullback should occur at higher prices. That's one thing I am definitely confident about. So, of course, that doesn't mean I'm going to bet my entire future on these stake because, well, nothing is 100% guaranteed, so I'm not going to leverage myself up to make shitload of money on these gamble things, but I have significant statistical occurrence for this thing. I think the weekly pullback will occur at higher prices. So, am I still bullish? Yes, I am. Though the daily chart is on supportive area, support context, last time we've experienced a Wyckoff pattern, which is of course similar, but not going to be copy-pasted. People tend to do it. Real traders know that this is for the dumb ones to talk about. So of course the goal is not to copy that and to say, well, we're going to do, we should be there, so we're going to do this and then this and this and this. Okay, well, oh boy. You really want to do better than that, okay? Wyckoff is unpredictable. Wyckoff is fully psychologically driven. So now that people are panicking, I don't know. All I know is that I see similar technical structure, leading me to believe that the overall technical structure could actually be replicated. Because look at it, okay? Back then, we were trading on supportive context. We're reaching for supportive context. But the first things is that back then, we flushed it all out because we've reversed the daily trend to be neutral and we've created a daily pullback, okay? So we're not going to do it again. We're not going to trade below these contexts. I don't nearly believe it, because if we ever touch this moving average, there is a huge trend follow opportunity on the monthly fucking chart time frame, which is the weekly pullback normally. So we're supposed to touch that trend line, that moving average, when we'll get the weekly pullback. So one thing I know is that normally we're not going to get there, okay? Like I said, it's not 100% chance, and nothing ever is in trading. There's still a chance I could be wrong, so don't gamble on what I just said. But my personal stance is I trade what I see, I trade what I think. This is the reason why I think this area is an area of support, and that we're not going to get there, okay? So until then, I need to look for other things. Right now, the sentiment is extremely bearish, so I'm paying attention to the bearish trend channel, okay? So of course, the bears will try to convince themselves that the buying area is on the support trend channel, which exactly is what they thought back then, okay? I so goddamn remember everyone's looking at these prices, the floor 27K price, and well, like I said, back then there were some technical supports for these areas. There were some technical factors pointing to these areas, but I said, don't be dumb enough to convince yourself that you have to wait for these prices to buy, or even worse, don't convince yourself that you can sell to buy at cheaper prices and then have more. That's really not what the point is. And even worse than that, I am going to short sell so that I can buy. Oh boy, no shit, Sherlock. Okay, all of these were absolutely worst ever decisions for a trader. So please don't make yourself into the same situation. Yes, the support trend channel is pointing to the levels that I see everywhere in the web today. The next technical level is 40K. Can we go out there? Yes, because these things have been said, the things I said is we must not get to the moving average, okay? So we probably won't get there, but still that means 40K in a lower shadow candle stuff, well, possible. We've seen that the leverage is still high in Glassnode, but I still don't know how quickly the data is updated. So we're probably going to get the answer by tomorrow, and I'm certainly not willing to take the risk for prices to get down to 40. So I had a plan. Okay, my plan was, of course, I'm not going to trade average prices when the dumb money is making leverage bets in an area in which the sentiment is willingly pushed to the downside, aka Wyckoff. So I said, I'm not going to trade this. I'm going to define a set of two levels. The first one was until we get a candle close above 49K, and I wanted a 4-hour candle close, or any candle close below 44K, I'm not going to decide. And my question was clear. I'm not going to pay these prices, and I'm willing to take the risk to eventually pay higher prices. I knew I would buy Bitcoin into these areas because whenever I see Wyckoff, I see accumulation. When I see accumulation, I see the beginning of a cycle. Oh, turns out I also see it with my indicators. I definitely want to buy that cycle, just like I would have bought this one. But on this one, I bought more altcoins than Bitcoins. And this one, as I still have quite a lot of altcoin now, I'd rather like to shift up a bit of my Bitcoin exposition using my personal cash. This time, I'm not using the speculative money I have. This is paired for altcoin further down the road investments. But right now, my portfolio is exactly the way I want it to be, but I see this as an opportunity to turn some of my saving money into Bitcoin. Remember that I'm never going to sell any of the Bitcoins I have. Never one, okay? So every Bitcoin I invest in is with cash, and every Bitcoin I invest in is something I'll never sell. So I wanted to make things real clear. I'm not buying to sell in here or whatever shit that is. I'm buying in because anyhow and anyway, all of your dollars and all of your euros will worth less than Bitcoin 5 years from now. And I'm not even arguing about that, okay? So when I see attractive prices and when I have some spare savings, I'm taking portions of it to put it into cryptos and in Bitcoin or Ethereum. But as I have like 40% in Ethereum exposition in the capital, I'm certainly not going to double down. I also like Atom, which I have now approximately 29% exposition on the capital. So I'm definitely not going to double down into this one as well. So what else do I have to do? All of the others, and specifically Bitcoin. So that's the reason why I'm going for this. This is my personal decision, so please guys don't copy me and all of these things, but understand the process and the motive. In Wyckoff accumulation pattern, I have one choice. Either I do nothing and I stand still with the bullish exposition I have in the portfolio, or I decide to invest some money. I have some speculative money, but it is mostly driven toward altcoin investments, so I'm not going to use it to buy Bitcoin. I've used some spare cash instead. Portion of it. I'm certainly not going to invest all of my cash in cryptos either, okay? Second stage, I have defined some levels in which I will act. The first level was first dip below 44K, I'm buying, which I have done later yesterday then. The next level in which I'm going to buy into is 40K, which means anything in between 44K and 40K, I don't give a fuck. Next level in which I'm going to act is 40K. What I'm going to do, take another 10% of my spare cash and invest it into Bitcoin as well. Simple as that, okay? The next action is until we eventually rebound right above 49K. Well, in that perspective, I will consider that the market has made its dip, and I will eventually consider reinvesting another chunk of my money at 49K. Okay? Which means that in the end, on average, I would have eventually bought 44 and 49, which would make me an average 47K entry price for my cash on Bitcoin. Of course, whether I'm going to be willing or not to buy at 49K depends on multiple factors. Most importantly, how do we reverse out there? If I have some technical signals, specifically on the weekly charts, I would consider doing such a thing. If I've got no signals on the weekly charts, then I'll probably just stick with the first entry I've made yesterday and no other ones. Okay? Though, what is to take out of today's episode? The first thing is, on Wyckoff accumulation, don't ever try to set your motives on the market. Okay, so if you are making short-term technical analysis saying the market has to reverse there or there because of this or that bullshit reason, not gonna happen. Make it easy on you guys. Wyckoff will always play two different stuff: time and psychology. Okay, because this is what they do. Time and uncertainty. So the informations will be mixed, and they will push so crazy amounts of information over your heads that will somehow trigger some emotions in your head that you have to act now for whatever reason that is. Don't do this, okay? Have a plan and act according to that plan. If you have no plan, means you're likely gonna act out of stupid decisions. So first of all, have a plan. Okay, second one, apply that plan. And third one, don't even try to dictate your timings to the market. Timings will be unpredictably bullshitting, and just don't fail for it, okay? And don't try to catch the bottom. It's not going to happen. You don't want to be the guy that bought the bottom and will brag themselves on social medias. These are asshole noob traders who does that, okay? So you've got all the information. Don't try to catch the bottom. Don't try to settle for your timings and impose them to the markets. Have a goddamn plan over daily and weekly candlesticks charts, and then apply the fucking plan and nothing more. No leverage possible out there. And for altcoins, god damn it, please stand by for a little while, okay? Uncertainty is at best, and until Bitcoin reverse, and we very likely will see Bitcoin reversing first, altcoins will keep bleeding or remain steady neutral until then. Remember the K-shaped recovery I told you about? Some assets like atoms and so on have decided they want to be part of the upside K area, but that doesn't mean they will not retrace back to supportive areas, okay? So pay attention to this. All of these assets could range for several weeks now, and I very well believe they do, okay? So let it happen. Don't be too violent on altcoins. Let Bitcoin dictate the market's decisions. And don't be dumb enough to think that if the stock market goes down, cryptos go down. Why? Because, boy, look at that. Do you see even a single sign of correlation between this and this? There's not even a glimpse of a correlation. So please don't go down this road. Bye, guys.